This video was brought to you by our new Investor Finder. Get weekly investor matches in your industry, your company stage, and your location, delivered to your email for free. Sign up with the link in the description. So picture this, 20-year-old me starting his first company, moving from Costa Rica to New York to be part of this startup accelerator, Dream It. It was just me and Philippe, my co-founder then, and we're still processing the impact that New York City can be for anyone, especially the first time they visit. And of course, we were completely broke. We were living in an NYU dorm. Now, on the first day at the Dream It office, this team of 7 people walks in. We can barely afford our shawarma, and here's this triple team. They've raised money, they have no revenue and little traction, and behind all of that is Pete Sullivan. Everything I've said about traction and raising money doesn't apply if you're this guy. Pete is one of the best hustlers I've met, and every time we catch up, I am equally mind blown by the stuff he's been able to achieve. Now, that company Triple didn't work out, and only a few months later, Pete was already starting, and of course raising money, for his new company, Jackpocket. Today, they announced their Series C round, a $50 million round raised on the backbone of a 4x annual growth in sales. Pete is our guest today, and will talk to us about how he built a team, how he recruited his CTO, and how he continues to succeed at getting checks. Now, I'll use a couple of snippets of our chat, of our conversation in this video, but if you want to listen to the full interview, go check out our new Company Forensics podcast. Let's get on to it. Testing the idea with investors. Again, there's nothing conventional about this guy. Pete had built a network of investors thanks to his previous company, so his method, the method he used to validate a bunch of ideas he had, was pitching them to different VCs and seeing how they reacted.
And basically, I gave myself about 60 days to kind of come up with a new concept of what I wanted to work on. And what I did was I started taking coffees with a bunch of the venture capital guys that I knew in New York City, and angel investors, and just spitting out some of these ideas with them over coffee. Yeah, I mean, I was literally, during that time, I was doing some consulting gigs, and I remember I took a trip up to Tahoe, and I got thrown in the car with a bunch of girls, and they had all just gotten their nail art done, and they were talking about nail art. So I was looking at things as customized nail art. I was looking at different types of automated processes, and then a lot of social based stuff, because Triple had a lot of social DNA in it. You know, all of a sudden I kind of was using those coffee meetings as a way to kind of vet my ideas and see what would gain interest and where I can have that quick traction. And from that, every time I brought up this lottery idea, their eyes would light up and they'd say, hey, wait, talk more about that lottery premise that you have.
Now, of course, not all of us have Pete's network to just go out and line up coffee meetings with investors, but these are cheap $4 tests to see if a value proposition makes sense. It also, of course, highlights the power of a network and the power of being in a city like New York. Another point I've made before is that you just can't start a business where you don't have a unique edge, a unique knowledge or experience to outrun the competition. Pete stood at a weird bridge between tech, design, and lottery.
And the reason that I even looked at the lottery was I grew up in a household where my dad was an everyday player of the New York and New Jersey lottery. He's a blue-collar guy. He works for the MTA. He moved us out of Brooklyn, New York to New Jersey to make a better life for us. And so as he started to commute, he would play both games and basically was the head coach for all my baseball, basketball, football teams. And so he would drive back to New York, pick us up, and before games and practices, he would always have to go get his numbers. And it was super embarrassing growing up because we would be late to our own games and practices. So I grew up with this real person that understood lottery culture. I was never a lottery player, and what I didn't know was how big lottery was. So I had this, perspective from my own family, but it turns out it's a $80 billion industry in the US. Americans spend more money on lottery tickets than all sporting event tickets, concert tickets, movie tickets, video games, and books combined.
Recruiting a CTO. Now, Pete and I both have a background in graphic design, and this has turned out useful because it's an odd combination, a hustler plus designer, if you will. Some design knowledge can help a CEO get involved with the product roadmap. It can help them sketch mockups and present decent UI ideas. It can help them come up with a solid pitch deck, wink. And of course, this can make the co-founder hunting process easier.
I basically went and got a desk at the first WeWork that opened up, and during that first month, they were opening up a new WeWork Labs. What I did was, WeWork actually didn't have a full platform. We had a Facebook group. Remember, this is the third WeWork now that has opened. It's the first big WeWork Labs, and they have a Facebook group. And I go and I write a post, hey, I'm looking for a back-end developer, blah, 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 blah. I hit enter. I wait about 20, 30 seconds and somebody pops over the screen. And he goes, are you Pete? I said, yeah. I said, he's like, look under, just after what you posted. About the same exact time we were posting, there was somebody saying, hey, listen, I'm a back-end engineer. I'm looking for some new work. Do you know anyone that's hiring? And we just like missed each other's posts. And it turned out I wasn't directly over him, but it was one desk over. And we literally went over the monitors. And I always tell this funny story of Leo. So, we bring him on and he's helping with the back end development. We also then I made a phone call, if you remember Matt Silber, who was at the Agreement Accelerator with us, and he was actually an intern for a company that went on to actually sell to Google, if you remember. And it was an iOS based company, and Matt was building an Android version, which was actually the only version that worked in time for demo day. So I get Leo, I call Matt. Now we can have someone building a client. I'm doing the design. Leo's doing the back end. And Leo, about 2 or 3 weeks in, and again, like obviously, it's under value in terms of I'm not doing fair market value compensation, but Leo knows that there might be something bigger here. And finally, he pulls me into a conference room at WeWork, and I go, this is what he's going to say. Hey, listen, I found a better paying situation on a consulting gig, because engineers are always, they can go on from project to project if they want. Right. So I said, okay, this is it. I'm losing it, and it sucks. I'm just starting to build this good relationship with this guy, and he comes in and he says, "Hey, listen, I want to be part of this. I want to be CTO. I want to get equity." And I said, "Okay, that's exactly what we wanted." So at that point, we hadn't even. I think we were just going through incorporation, and then so that became kind of the founding team. And one of my best friends from San Francisco ended up putting a little bit of money in. And he said, hey, listen, whenever you raise real money, I want to quit my job in San Francisco. And he now runs all of our lottery operations across the country. So he's the one that actually gets everything set up. So the whole team's still together. It's pretty great.
Now, Jackpocket announced a round of $50 million today. Before getting into that story, we talked about the previous rounds.
It was funny, the way I met my Series A investor, you'll never believe it, it was actually at South by Southwest. And everyone says you'll never meet investors at South by Southwest. And I would say the same. The first hour I got there, we went to the hotel. We went on a bus that was going to a barbecue off a little outside Austin, and ended up meeting our Series A lead on the bus. Within the first hour of being there, after that, I don't think I talked to another investor, and I did 2 years in a row after that and never got a deal closed. So it was kind of like beginner's luck, I guess. My first time going to South by Southwest, my first hour there. So again, that money was then going to be used. How can we market? How can we continue to build a team? How can we go to more states?
I was especially interested in traction, what traction was needed and what traction they had for their Series A, their Series B, and which is, for many of you watching, probably a lot closer than a Series C. Jackpocket validated the product with the New York Lottery, and they had a good and growing number of users in New York, which proved that their model was working. This was the traction needed to raise money, but New York shut them down soon after closing their Series A round.
And we had gotten New York, and at this time, New Jersey, to say, okay, we're going to do regulation. So I think investors were opportunistic that this was finally going to come to fruition at some point, that they had to kind of pay to, get in early. But at the same time, we were able to launch 2 smaller states, and we're approaching a launch in Texas, which was a huge state for us. And so at that point, our revenue is a percentage of the amount of ticket sales, but I think we were at that point showcasing enough that investors could extrapolate, hey, if they continue to add states and we continue to add marketing, we're going to see this thing continue to grow. And so the points that I think we had proven out by then were that the cost of acquisition and the average spend, so LTV to CAC ratio, was getting into a place that the product would be viable long term. Now we needed to scale that, and Texas was that first opportunity that allowed us to scale. And it was funny, the B was very oversubscribed because at that point, again, we now had momentum that something was going to happen in New York. We had momentum that something was happening in New Jersey. And we had shown that we can get into other states. So we actually ended up raising a B1, which was a follow-on to that. And that's what we used to really help propel more sales in Texas. And it was kind of, we were also looking at ourselves and saying, can we scale this thing? Can we do actually radio ads? Can we do, obviously, digital ads? And with our company, we have to do a whole different set of compliance. So throughout this process, we were getting better and better at understanding the highly complex kind of structure that we had to navigate. And I think investors were starting to buy confidence. Now, that said, it was not a normal SaaS business, right? And it's a direct to consumer, but you have this really kind of interesting government situation.
Jackpocket has an insane model where they have to physically print the tickets, store them in a vault with top-line security and fire safety because they may literally be storing a winning multi-million-dollar lottery ticket. They also have lobbyists on retainer because they need to get regulations approved to operate in different states. As part of this round, they are launching in Florida and New York City, one of the top lottery states in the US. But let's get back to the rounds of funding.
We're doing about close to 4x year over year in terms of sales. Since December, we launched 6 new states. And we're about to enter the 2 biggest states in the country, which are New York and Florida. We just, as of this weekend, got our license for New York. So nobody even knows about that, but we're super excited. We'll be launching sometime in the next few weeks. And so that was a 3-year process. And with the Series C, we also had to prove LTV to CAC ratio, right? Now it really came down, growth investors want to make sure your unit economics are solid. And what we saw was, as we got into the bigger states, New Jersey's been live since December, we were really able to show that we were able to get more monthly spend, better retention, and a lower CAC. And basically, we knew we had to hit, there's this magical line in the sand, which is $10 million of ARR, annualized revenue or run rate, whatever you want to call it. And so we were able to get there. We were able to prove that this now could do a growth round. And I think when choosing investors, what you're really looking for, who can help propel the company on the Series D if you need it. And we're in a position where we've modeled it out. And our model is I think another thing that growth investors want, they want a highly complex model that's institutional quality. And our VP of Finance came from DraftKings and Ernst & Young, and he's just amazing. And we have so much confidence in it. When we know our marketing spend in a particular month, we'll get into between 1% to 2% of our target on sales and revenue. And that's super important. They want to see the historical context. And there were some things, it's funny, in the Series C that we were, in the deck that we were saying, okay, Q3, this is where we want to hit. And that can be a little bit risky, right? Because you may not hit it by the time, that comes. Luckily, we hit where we thought we were going to be. And so we're really excited. And this is going to be the last round that we need capital for. We actually, there's what we call contribution coverage positive, meaning that your gross profit actually covers all your fixed expenses. So if you were to turn off marketing, the company could be profitable. Obviously, we're in a growth stage. And I think as long as the unit economics make sense. And so one thing everyone looks at is ROAS, right? Return on ad spend. So we try to track that on day 0, day 1, day 7, day 30, and understand that, okay, the deployment of capital that we're doing in marketing is actually making sense on a unit economics basis. And if you look at our breakdown, I think this year on the budget, about 66% of our expenses is going to be marketing.
All right, so the full story behind their round is in our podcast. Go and listen to that if you found this useful. Hopefully you still believe me when I tell you need traction to raise money, unless you're Pete Sullivan. We'll see you next week.